Hello everyone, thanks for taking time out of your Saturday morning and welcome to this educational presentation of 2 simple steps to help maximize your trading. Now I've been teaching for quite a while now, and if there's one thing I've noticed is that a lot of traders are just one step or two away from being consistent. And it really is as simple as that. They're really right at the door, but there are just a few things keeping them away from their consistency. It could be as simple as trading in sync with the trend. It could be something involving your entries or your stop placement. Excuse me. Well, with today's simple steps I'm going to be sharing with you, you could have used all of these things that you'll be learning today so that you could generate setups such as this. Now, this is a chart in Tiffany coming in to the end of March. All right. Now, each and every one of these up arrows could have been used for one of those categories to help you become more consistent, to help you maximize your trading. These things I'm going to be teaching you today, you can find on your own. They're that simple that you'll be able to look at a chart and be able to spot them immediately, or you can use our platform, which automatically generates these setups for you because it is the educational portal that teaches you how to trade. So this is going to be a great presentation today. Welcome once again. My name is Steven Primo, President and founder of Specialist Trading. And if you're new to my webinars on Saturday, we are all about teaching you how to become consistent. That's the main thing that you really want to look for as a trader. We're not here to give you some master system that generates thousands and thousands of dollars every month, and all you have to do is blindly take the orders. And we're not here to tell you what market to trade or what time frame. If you've come here looking for that information, you've come to the wrong place. All we're doing, our only goal is simply to educate you, because in my 42 years of trading, that's really what's missing from most traders is sound fundamental education. And when you don't have the education, what do? You start listening to someone or something else. I know this from firsthand experience because when I first started trading, that's what I did. I've been trading for 42 years. My career first began on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist doesn't mean you're any more special than anyone else. It just means that you specialized in making markets in roughly about 50 or 60 stocks. So if anyone wanted to buy, let's say, IBM or Waste Management, those were markets those were stocks I made markets in. You had to go up to the trader who specialized in that. Now, I made markets. I was a specialist during the crash of '87 in the bull market. So I've been in every environment and every type of market you can think of. Plus, I've traded just about everything you can think of. Trust me, if you're trading something that's some brand new system, it's already been around before. It's just been rebranded. So I know what works in terms of consistency, and I know what doesn't. So we're here to teach you so that you don't have to waste your time, and most especially your hard-earned money, searching for the Holy Grail. The Holy Grail is really accessible. It's sound fundamental education. So I'm going to educate you today with 2 simple steps to help maximize your trading. But before we begin, we are required by law to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 2 simple steps, but please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So once again, we are required to share this with you. So as you're taking a brief moment to view the disclaimer, if you haven't done so already, I'd like to extend an invitation for each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. I post different information on a daily basis, anywhere from signals or information about some of the trades that are currently taking place in the markets, to little bits of financial wisdom I've accumulated along the way. So lots of great free educational information. Feel free to follow us on Twitter. Okay, so once again, if you're new to my presentations, we are all about educating you. In fact, as you see here, that's my only goal. My goal is not to force feed you signals the way so many other presenters do. My goal is not to tell you, well, this is the perfect market to trade or this is the perfect time frame. I must get emails on a daily basis telling me or asking me, Steve, what's the best time frame to trade? And I always say the same thing. The best one is the one that makes you feel the most comfortable, because everyone should trade differently. No 2 traders should ever trade alike. And that's the great myth in our industry, is that all you have to do is go to a website, pay the subscription fee and find out what this guy is buying or selling, and then you just do the same thing. Now, if that works so well, then why has it been estimated that 85% of all traders fail? It's because that doesn't work well. I tried that 42 years ago and it didn't work for me. Okay, so what really makes you a consistent trader is making your own decisions. And the reason why most traders don't want to make their own decisions is because they're not supplied or provided with the adequate information, the adequate education. And this is what we do. This is the gap we fill at Specialist Trading and Pro Trader Strategies. We provide our students around the world in over 115 countries and in virtually every state in the United States sound fundamental education and mentoring so that you can make your own decisions. In my opinion, that is the only way one will become a consistent trader. So you'll see how simple it is today. In fact, most of the things I found in 40 plus years of trading that work are extremely simple. I mean, if you've ever listened to a presenter in a webinar before and he's been trading for a relatively short time, let's say 5, 10, 15 years, which is really a very short time actually, and they have these convoluted plans, these very complicated, illogical ways of trading that, you know, you sit there and you go, I have no idea what they're talking about. But this guy's a success, so I might as well pay for this course. But they're just too complicated. But if you look at the guys who've been trading for maybe 30, 40, 50 years, most of their trading plans are extremely simple, maybe 3 to 5 rules at most. Well, that's what makes you consistent, simplicity. And you'll see just how simple these 2 steps are that I'm going to be sharing with you today. Now, since this is an educational class, please ask me as many questions as possible. But please wait till the very end. I'm a little bit different from other presenters in that I don't want to stop at every slide. We'll be here far too long. So if you have a question or if you have some type of inquiry, just wait till the end, write it down and try to memorize it. The only question I will answer is the most common, and that is this being recorded? Yes, it is. We record each of our presentations. So if you have to leave early or if you're having technical issues with your internet connection, don't worry. We will send each and every one of you a link to this recording. But we have a good crowd here today. So if you happen to join in late, remember, hold off on any questions till the end. All right, with that stated, let us begin. We're going to be talking about the 2 steps. Here's the first step, and you'll just be amazed at how simple this is, but try these, and you can start applying these as soon as the presentation's over, and you'll see how they can really help you. If you get a buy signal, I don't care if it's one of my strategies, I don't care if it's one of yours, I don't care what it's based off of. It could be based off news, it could be based off the full moon. It makes no difference, but if you get a buy signal, it can only be entered above the 50-period simple moving average. In other words, it has to be generated above the 50-period moving average, all right? So as we look here at this generic chart, someone looking at this would say, well, Steve, I don't really have any idea what this is going to do. I mean, this is going straight down, straight up, back down again. There's really no trend here. Well, that's not true. The overall trend is up because price is above the 50. So that's going to work in our favor. This is going to help us become consistent because the market is telling us, not some guy in a chat room, but the market is telling us that since price is above the 50, the overall trend is up. And so we never want to buck the overall trend. We never want to go against it and try and pick tops and bottoms. We always want to be in sync with the overall trend. So the overall trend is up here, so we're only going to look for buy setups. Now, conversely, if the overall trend is down, well, sell signals naturally can only be entered below the 50-period simple moving average. All right, stands to reason that we just flip the coin upside down. Someone looking at this once again would say, well, Steve, we're just consolidating to go higher. This is a pennant formation. The earnings are going to come out and this stock's going to explode. Well, that's the way most traders trade, once again, based off of inconsistent information. Why not just focus on what the market's telling you? And the way you do that is to apply the 50-period moving average. Because right here, the market, from what we've been taught, conventional wisdom is telling us that it's not doing anything. It's kind of in a range mode. But if you apply the 50, the market, not some guy in a chat room, but the market is telling you, no, the overall trend is down. And I most likely want to go lower. So you don't want to buy if the overall trend is down. I don't care what somebody says in a trading room. I don't care what the earnings are going to be estimated at. If we are below the 50, you will have a higher level of consistency. You will maximize your trading if you are in sync with the overall trend. Okay, so that's step number 1. The overall trend is down in this example. Let's go on to step number 2. Remember, trading does not have to be complicated. very consistent trading is usually extremely simple. So step number 2 calls for buy signal bars. In other words, whatever bar all the requirements come into play. Remember, I don't care what strategy or system you're using. It makes no difference. But when you get all the rules coming into play, that bar must close in the top 25% of its range. Okay? Because that's going to give a tremendous clue coming from the market. Now, if you're not familiar with what that means at 25% of its range, let's say we have a generic bar here, and the reason why I didn't include what market or what time frame is because I don't want you to get attached to thinking, oh, well, this only works on stocks or this only works on futures. It makes no difference if this is a 5-minute bar or a monthly bar. The same concept will apply. So if you have an up bar like this, you would simply want to make sure that it closed in the top 25% or the top quarter. Why? Because that's an indication to buy coming from the market. The market is telling you most likely it wants to go higher right away on the short term. Remember, the 50-period moving average tells you the overall trend. When a bar closes in the top 25%, it's telling you on a shorter term that it wants to go higher. So as we look here at this example, once again, this is a generic example. We see here that we have two situations where we close towards the top. Now, the first example, we went up here for a few bars and then went down, but we did go higher. For all we know, these are monthly bars. But now the second situation, look what happened. So you see how you have consistency in your back pocket when you're looking at these bars and you're in sync with the overall trend. Now, conversely, you're getting a sell signal. Why? Because you're below the 50-period moving average. Well, you only want to take that signal if it closes in the bottom 25% of its range. It makes no difference what it's based off of. Remember, all you have to do, if you get a bar that is a down day, divide it by 4 separate but equal parts, and if you close in that bottom 25%, that's your indication to sell. Why? Because the market is giving you a clue that on the short term, it wants to go lower. You see, you don't want to sell, even if you're below the 50, if the bar closes towards its high, because it's telling you it wants to go a little higher. So we want to wait for it to go in our direction, that it's confirmed that it's headed in our direction on the short term. For example, we look at that generic chart. Once again, we're below the 50. Here is the bar that closes in the bottom 25%. Let's say that let's say for right here, you got your sell signal, okay? And look what happens. It goes up 2 or 3 days. Now, someone at this point may give up and stop themselves out. But if you wait for this bar, which closes in its bottom 25%, even if you're entering at a lower spot on the chart, that's okay. Why? Because you have confirmation. You don't have to sit through 3 or 4 days or 3 or 4 bars of it going against you. That's usually where the inconsistency comes in, because your stop takes you out or you get frightened and you exit with a loss. How many times have you done that where you've gotten out thinking, boy, here is another loss. I can't take another one, so I'm just going to get out and before this turns into a large loss. And then the minute you get out, it goes in your direction. Okay? Extremely frustrated. Happens to everyone. But you'll put the odds in your favor if you wait for the bar to close in the bottom 25% if you're selling, as the example shows. So even though you may not have sold at the high, that's okay. What you want to do as a trader is get in the minute it starts going in your direction. This is not guaranteed, but this will help you a lot with that experience, because the worst thing is to sit on a trade, have it go against you the minute you get in, and you think, why did I do this? And so you stop yourself out, you take a small loss, and then it starts to move. Why not just wait till you have some type of confirmation that it's headed in your direction? This will add to your consistency. Now, you can do this on your own. In fact, I'm sure some of you are looking at charts right now and saying, wow, okay, I see this. I added the 50-period moving average, and I see bars that close above and below in their top or bottom 25%. Yeah, they kind of continue to go in that direction. Wow, this could really help me. Now, you can do this on your own. It's a little bit cumbersome. When I started learning this from my mentors about 30 or 40 years ago, I just had to look at charts, on a visual basis and had to do it myself. But now, with our new Rps Primo charting platform, we've taken all the hard work out for you because it's automated. All you have to do is click on these 2 simple steps, and you will see them automatically generated on your charts. Now, I know a lot of you are saying, well, okay, this is great, but how do I apply this? What do I use this for? Well, you can either add these two edges to your current trading method, and we really feel that it will strongly increase your odds for consistency. For example, just by applying the simple 50-period moving average, okay? If you are only taking your buy signals above and only taking your sell signals below, we strongly feel that you will increase your odds for consistency. But let's say that you wait for those setups on the top or bottom 25%. Well, you can use those in multiple different ways. You can use those as your entry point. You can use those to build a strategy based on them. You can use them for stop placements. There are just a number of ways to do. In fact, you can use them to define the short-term trend. So let me show you, let's give you some examples and show you how you could have used these on some current charts that just happened roughly within the last month or so, and how they could have helped you. All right, remember, this is not a strategy we're talking about today. Many weekends I will give strategy courses and give you a couple of the rules for buying or selling. These are just two different edges that you can apply to your strategy, or you can build a strategy off of. But remember, we want to have the building blocks of consistency. You don't want to build a strategy off of the opposite of these things. In other words, well, your strategy says to buy at the low and sell at the high. So what we want to do is look for bottoms and look for tops. Trust me, take it from someone who's done that 40 years ago. It doesn't work. Every once in a while, you'll get a great trade and you'll say, gosh, this is great. I'm on the right track and I made a lot of money. I picked the exact bottom or I picked the exact top. And then what happens? The next 2 or 3 trades, you give it all back, right? Because there's no consistency in that. No one knows how low or how high something will go. And why waste your time trying to pick where those levels are? It's a lot easier. You're going to sleep a lot better at night, and your account will look much better if you just simply go in sync with the overall trend as opposed to trying to buck it. We don't want to swim upstream. We want to swim with the current at our back. And the way you do that is by applying these two simple steps. All right, so let's look at this chart here in Tiffany, okay? Now, obviously in hindsight, this was having a very nice upward move, but here's how simple it is to apply these steps on our platform. The very first thing you want to do is click on the buy-sell line in the upper green strategy tab. That's what we call the 50-period moving average. We call it the buy-sell line. We have a number of ways in which to do it, but you'll see a drop-down menu up here. Let's just pick the simplest way, which is the 50-period moving average, okay? And that will automatically appear. So even though you look back in hindsight and say, wow, this thing has really gone up, we knew back here well in advance that this stock wanted to go higher. How high? We have no idea. And was it going to stay above the 50? No, no one knows. But right here, when it was just basically going sideways, the stock, not some guy in a chat room, not some earnings report, but the stock was telling you that you should only be looking at this with a buyer's bias. Why? Because it's above the 50. You see how simple this is? There's no reason to overcomplicate your trading with all these tons of indicators and things. I mean, everything I'm sharing with you today, you can do on your own right now. Now, let's go to the second step. All you would have to do is click on top, bottom 25%. Those are the bars we talked about. The drop-down menu appears. Let's click on the signal arrows. These will show you all the bars that close in the top 25% that are above the 50. You think this could have helped you? Now, someone would say, okay, Steve, this is great, but how do I use this? Well, let's just say your strategy gave you a buy signal here on this little short-term breakout. You're above the 50. You could use this as a stop placement. Every time you see one of these arrows, you simply raise your stop above. Below the arrow. And there you would have been stopped out. You would have had a nice run. Now, as this goes lower, let's say you get back in, you continue to raise your stop. That's just one way. Another way is this can be defined as a point of entry. So in other words, let's say you want to buy, but you have no idea. Let's say your strategy says that Tiffany is a buy. Every time you see one of those arrows, that's a high probability point of entry. Now, in our courses, we take it even steps further on how to apply entries. But we're just giving you a basic concept here. And you see how some of these are better than others, but we teach you in our courses which ones to take. Let's look at another example in Halliburton, okay? This is in November coming into the new year. Obviously, in hindsight, where we're going lower, this is where most investors lose money because they hold on to a position. They either looked at the earnings or heard somebody talk about it on TV and said, gosh, I bought that stock, and now I just turned into a really long-term investor because it's just going lower and lower. How did I know it was going to go down? I thought it was going to go up. What's the first thing you do before you make any trade, any investment? Is click on the buy-sell line. click on the 50-period moving average, and then ask yourself, where is price in relation to that? Well, price has been below. And remember the first thing we said, you never want to buy below the 50. Do you see how this would automatically help your consistency? You would have been out of this already. And I don't care if your brother-in-law or some master trader in a webinar said you have to buy this stock because it's really hit a bottom right here and all the institutions are buying it. Don't listen to that because, trust me, there's no consistency in that. Sure, it held for a week or two, and then look what happened, made lower lows. Now, if we want to go to the next step and see what the short-term trend is telling us, we click on the top bottom 25%, click on signal arrows, and automatically look at all the indications of the short-term trend, how low this wanted to go. See how the market was telling you it wanted to go lower. When these bars close in the top or bottom 25%, and they just do right now, it's telling you it wants to go lower on the short term. There's not a lot of bars here that close in the top 25%. So you could have used these as entry points. You could have used them as stop placement. Let's say you were lucky enough to get short roughly around here. Well, place your stop just above these arrows, okay? And you could have ridden them all the way down roughly to this point. You could have got in again and used this as stop placement all the way down. Lots of different ways to use these. We teach you in the course, but I'm just sharing with you how you can become consistent by using extremely simple steps. And these two steps can really help maximize your trading. You can start using them as early as Monday. How about BBY? Okay, well, someone would say, well, Steve, yeah, we were going down, but then we went back up really strong. How could these things have helped me? Well, we apply the 50, and we knew the entire time not to be investing or trading this to the long side. The minute we crossed over right here, well, what happens? We turn into a buyer's mode. We're looking for buy setups. Just because we close above does not mean you buy at the market, or just because you close below does not mean you sell short. It means that that's your mindset now. You should be looking at this from a buyer's point of view. And someone would have said, well, yeah, but we didn't do anything for a couple of weeks here. Well, looking back in hindsight, wouldn't you like to find some strategy or some technique that could have gotten you long here? Because then look what happened after that. Well, maybe you want to use those arrows at the top or bottom 25% to help you. Look how they could have helped you. Look at all the confluence here of days or, they closed in the bottom 25%, and then look how it changed once it started going up. You see, the market always tells you what it wants to do. But for some reason, we've never been trained to listen to that. We're always trained to listen to some guy in a chat room or some earnings report or what the institutions are doing or even what some guy in a webinar is saying. I never tell my students what to buy or what to sell. I teach them what to look for so that they can make their own decision. That would be doing you a disservice if I said, listen, I'm buying this or I'm selling this, so if you want to piggyback on that, well, why don't you do that? Well, that would automatically be taking you out of the game. That goes against our entire philosophy at Specialist Trading. Our philosophy is no two traders should ever trade alike. You should be making your own decisions. So what we do is provide you with the information so that you can do that. Now, let's look at some different time frames and some different markets, because I don't want you to think this only works on daily bars for stocks. All right, so let's look at a weekly chart of Apple. Once again, someone looking at this will say, boy, this is going back to 2016. How did I know this is going to go up? I wish I could have bought this, but who knew? I mean, I didn't know it was going to go up this high. Well, no one knows, once again, how high or how low something will go. Only thing we can track is what the market wants to do, and then we will just go in that direction. So if we if we apply the buy-sell line, it was telling us well in advance on a weekly time frame that it wanted to go higher. Now, obviously, we didn't know how high, but you could just say to yourself, well, listen, if I'm going to be doing something, if I want to invest, I should be still considering buying Apple because it hasn't really closed below its 50 on a weekly time frame. And then if we apply the top bottom 25%, look at the confluence here of bars that close in the top. So don't you think on a short-term basis, the market was telling you it wanted to go higher? Now, this is something you can do, once again, on your own, but it's all automatically generated for you on our platform to take the hard work out of it for you. Here's a 4-hour chart of the euro-dollar. A lot of currency pair traders like to trade 4-hour charts, okay? Once again, in hindsight, someone could say, gosh, this really went down here, the euro-dollar. I really wish I could have found out. This just happened the last couple of weeks ago. Well, it wouldn't have been that hard because once you apply the 50, you knew well in advance that you shouldn't at least be buying and that you should be looking at the euro dollar on a 4-hour time frame from a seller's bias. So there's no one, traders love to be victims. They love to always say, gosh, I didn't know that, or gosh, I was waiting for the earnings or this economic report to come out and it went the opposite. Boy, I didn't know anything what was going on. And traders love to always blame someone or something else. The reason is because we've all been taught to rely on someone or something else to tell us what to do. But once you have the knowledge and education, you'll never have to be a victim again. Now, this is not guaranteeing you that every trade is going to be a winner, but at least you take responsibility for your own actions. There's no one who's going to ever steer you the wrong way, or you can blame some economic report or some $10,000 class you took. There's no one to blame anymore. And on top of that, there's no one to rely on, and even when you have successes, to congratulate, because you'll be congratulating yourself when you have a winning trade. Now, since you knew that this was below the 50, well, you can apply the top bottom 25% and look at all the bars here that close in the bottom 25. This is the market. This was the 4-hour euro dollar telling us it wants to go lower. Let's say you were lucky enough to get short here. Well, you could have just placed your stop above each and every one of these arrows until you eventually got stopped out. Just one of the many ways in which to apply this. Here's a 5-minute chart of the E-mini futures. I believe this was just on April 1st or 2nd. All right, 5-minute chart. Now look how the market went up. Once again, traders love to be victims and say, gosh, the market went up and I didn't get any signals, or I didn't know it was going to go up today. I thought there was some bad news coming out. It's silly. You knew the market was going up because you applied the 50, and right here at, I believe, the opening or prior to the opening, we were above the 50. So you knew the market wanted to go higher. How high? No one knows, but at least until it went below, you should only have been a buyer. And if the market was telling you on a short-term basis which direction it wanted to go, you just apply the top-bottom 25% bar. Now, you could have used any of these as an entry point. Now, some are better than others. Just to give you one little clue, we always tell our students sometimes it's not been, since none of this is statistical, these are just observations that our students around the world and we have made at Specialist Trading and Pro Trader Strategies. Sometimes the best setups are the ones that are closest to or touching the 50-period moving average. As you see right here, another one right here. Now here they're away, but look what happened here. It touched and you had a nice run. These are just one of the many ways we teach you in our courses how to apply these. And lastly, we can look at crude oil. All right, let's look at commodities. When the market goes south and when it starts to have trouble, a lot of traders like to transfer over onto a different market that they feel safe. It's something that's tangible, such as commodities. But they're frightened because they say to themselves, well, Steve, it's totally different. It's a market I'm not familiar with. I don't understand how it works, and I'm not sure that, it's very risky from what I've heard. Trust me, it's no different from trading stocks, futures, currency pairs. The same principles apply. Just because we're looking at a 5-minute chart of the E-mini and we transfer over onto a daily bar chart of crude oil, it makes no difference. We'll use the same concepts. We'll apply the buy-sell line on our platform, and we automatically have the 50-period moving average appear. So right here, this was going back to October of 2018. We knew that we should not be in crude oil. Now, once we had consecutive bars closing above, what is crude oil telling us? Not some economic report, not what's going on in the world, but what is crude oil, the actual chart, telling us? It's telling us it wants to go higher. So should we be shorting crude oil? Should we be listening to some guy on a webinar, some report saying that crude oil is going to go lower, oil is going to go lower? No. Just listen to the market. It's telling you it wants to go higher. So right there, you would have known that we should look at this from a buyer's perspective. Now, if you want to see what the short term is telling you, because this is just the overall trend, what's the short-term trend tell us? Well, we click on the top bottom 25% and look at the confluence of bars that closed in the bottom 25%, and look how it changed once we started going higher. So the short term is telling us it wants to go higher as well. If we looked at one of these bars that touched the 50, don't you think that would have been a nice place to buy just based on a bar that closed in the top 25%? Okay, so there's lots of different ways to use this. Are we saying that it works 100% of the time? No. As you can see here, here was a bar that touched the 50, went down for one day, and then went back up. But that's okay. You most likely, if you stuck with it, you would have gotten in here and made all that money back and more. This is what we mean by consistency. Consistency means that we are aware that we will have losses from time to time. That's okay. But we're not trying to pick tops and bottoms. If you were trying to pick a bottom in crude oil here, do you think you would have done very well? Most likely you would have held, like most traders, as long as you could. Right here, you would have said, well, this is the major support. That subscription service or that chat room I subscribe to says that we finally bottomed out, so you most likely buy more, double up, and then look what happens. And then it's this point, usually, that most traders would exit and say, this is too big of a loss. I can't hold on to this anymore. And that would usually be right at the bottom. And then as it's going up, you say, wow, now it's going up. I'm going to short it again, and now you lose even more money. A lot easier if you see what the overall trend is and go with it. This is the current of the river. So just simply swim in that direction. Once the current changes right here, swim in this direction. It's really simple. We make trading more complicated than it has to be. Everything I've shared with you today, everything I've taught you, you can start looking for on your own. In fact, I'm almost guaranteed that many of you are doing this right now as I'm speaking. You're looking at your own charts or your own last trades. And most likely, you're probably saying to yourself, wow, I wish I had known this before. I would never have bought below the 50 or sold above. It would have saved me so much money. Well, let's recap. Remember, step one, always apply the 50-period moving average. I don't care if you trade 5-minute charts. I don't care if you trade monthly bars. It makes absolutely no difference. You should always have a 50-period moving average. And whatever your strategy is, I don't care if it's based on the tides of the ocean or it's based off of fundamental indicators. I don't care. But if your strategy or system generates a buy signal, it must be above the 50. You'll have a greater odds for consistency if it is. And if it generates a sell signal, it must be below. Remember, we're trying to teach you to become consistent. We're not trying to teach you to hit home runs. Trust me, I worked on the floor of the stock exchange with about 200, 300 traders. And many of them used to trade, trying to get the home runs, pick the tops and bottoms. And many of them did very well. They'd make tons of money, relatively large amounts of money in a short time. Hundreds of thousands, if not millions. And as I always say, not one of those traders is still trading. Why? Because they gave it all back. There's no consistency in trying to pick tops and bottoms. So apply the 50-period simple moving average to find out what the overall trend is. You want to be in sync with the overall trend. Then, if you want to see what the short-term trend is, look for the top, bottom 25% bars. You can use these in multiple different ways as your entry point. You can use them for stop placement. You can use them as a confluence to find out what the short-term direction is. There's a lot of different ways we teach in our courses. Remember, you can start doing this right now. As I stated, most of you are probably, but it's so simple on our PTS Primo charting platform because we've taken all the hard work out of it for you. We've done it automatically so that you just click on those tabs and you automatically can see going back months, years, where those indicators were. So, before you ask me questions, ask yourself, do you think these edges could have helped your trading this past year? I can almost guarantee that for most of you, yes, they would have helped you tremendously. We have a great offer for all of you taking time out of your Saturday morning to come and attend this presentation. We're going to give you our PTS Primo charts on a great discount for a trial offer. Remember, this is the platform that teaches traders how to trade. We're going to give you a 30-day trial if you haven't joined us already for only $7, okay? This is just in good faith. We're not trying to sell you some system that costs $500 or $1,000. We want to get to know you, and the only way to do that is by making it as inexpensive as possible. Now, with this trial, you're going to get our enhanced buy sell line. Remember, we have 4 different ways to watch and to view that 50-period simple moving average. You're also going to get immediate access to the top bottom 25% feature. One click away, and you automatically see those up and down arrows that close in the bottom or top 25%. You're also going to get our Rps Calculator. This is a calculator that automatically determines your size, your position size. So you never have to figure out exactly how many shares should I buy. I'm not really sure. I had a good trade here, so maybe I should load up the truck here and trade as much as possible. This will automatically decide for you. Now it comes with 90 of the most prominent technical indicators involved. But remember, we also have a signal scanner, so you can scan for these setups on a nightly basis. And if you feel you must look at fundamental news, we have free Bloomberg TVs. You see here, we have an icon on on the platform, which is our media icon. All you have to do is click that on, and you'll get a media page with live fundamental information coming in from Bluebird TV. Any economic report, any earnings report, if you feel you must look at that, remember, we're not here to tell you what not to do. We're just here to educate you. And if you feel you must look at fundamental news, fine. We provide it for you live as well. And then this all comes with personalized tech support. If there's ever any reason why you can't load up a chart or understand how to apply something, we were there in a matter of moments to resolve the issues for you. This is only going to be for $7. I mean, if you're going out to breakfast today, you're going to probably spend 2 or 3 times that amount. Even if you go to a fast food restaurant, let's say you just go out to get a cup of coffee, it's probably going to cost you that same amount or more. So why not spend the money on educating you, okay? For 30 days, you can see for yourself if this could really help. Here's how to take advantage of this. Contact Pro Trader Strategies. I designed and developed the platform with them, and they handle all of my courses in terms of discounts and pricing. You can call them directly at area code 310-598-6066. If you see down at the bottom, that's the link that takes you to the $7 sign-up page. If you can't access that, there is a live link that's been posted in the chat box. If you go to the GoToWebinar column in the far right, just go down to the chat box, open that up, and there's a live link. You can use that, okay? Now remember, I said I would answer your questions at the end. We are just about at the end of the presentation. So if any of you have any questions, please write them in right now, and I will answer them to the best of my ability. Let's see, I have one already. It says, how can you buy a put option with a low premium? Well, that's a question for another class. First of all, this class was just explaining those 2 steps. We are not a brokerage. In other words, we're not trying to explain how to buy options or what the best strategy is for that. What we're doing is trying to educate you. So I realize this is a sound question, but it's something more suited for options trading. This is not an options class today. We do have, if you contact Pro Trader Strategies, they do have webinars that do speak about contracts for buying options with low premiums. I would suggest contacting Pro Trader Strategies, and they can tell you when that webinar is going to be, okay? We're only talking today about these 2 simple steps that can help you with your trading. Now, someone's asking, this sounds great, but what happens after 30 days? Well, after 30 days, you will go up to the standard minimum price, which I believe is $97, which is still tremendously inexpensive, because if you look at platforms today that have this much information, many of them are $200, $300. So it's still a very inexpensive way to get 40 years of fundamental education for such an inexpensive price. So this is a tremendous, tremendous offer. People are saying, can I use this on intraday trading? Sure. I showed you one example there with a 5-minute chart of the E-mini. In fact, I use it. Because of my schedule and teaching, I'm not able to look at a lot of higher time frames, and I have a limited time to trade. So I usually trade intraday, and I'll look at tick charts, I'll look at 5-minute charts, and I use the same principles. Okay. Stan is saying, can you show how these signals work with day trading? Yeah. Well, Stan, this is not a live presentation. This is just simply a static PowerPoint presentation. I don't have access to live real-time charts. So all I would suggest, Dan, is you have the information right there in front of you. I mean, open up a chart, go to a intraday trade, and see how these bars close in the top or bottom 25%, apply the 50, and you can see that, okay, well, what are some of the most common ways to use this? Well, first thing is, if you're above the 50, you only want to be a buyer, even if it's on a 5-minute chart. If you're below, you only want to be a seller. Immediately apply that, and you'll just see how much consistency that would have given you, okay, just off the bat. Now, look for the bars that close in the top or bottom 25%, and you can use these in multiple different ways. Firstly, if you see what we call a cluster of, let's say, a bunch of bars that are above the 50 and close in the top 25%, this is usually a sign coming from the market that it really wants to shoot up strongly. Not guaranteed, but a very strong way to see that. And if you do your own research, you'll see that happening a lot intraday. You'll see a cluster of bars that close in the top 25%, and then the market, whatever you're looking at, takes off. Same way to the downside. Another thing, as I taught you, another tip or technique that a lot of our students have said is, like, they say, well, if you are thinking about buying, wait for a bar to come close to or touch that 50-period moving average that has a green arrow under it, meaning that it closed in the top 25%, and that's your entry point. You can use that as an entry point. Another way is once you get into a 5 or 10 minute chart and you're long, you say, boy, this is working great. I'm doing really well, but how do I track this? Well, every time a bar closes in the top 25%, you can place your stop somewhere just below that. There's a lot of different ways in which to use these. These are all things I teach in my courses and in my strategy classes. But we're just sharing with you, how you can do it. We want you to go out and research these on your own. In fact, we want you to edit and alter them to meet your needs. Remember, you're in charge of your trading. So this is great information you have. I've given you. Run with it. Experiment with it. I know it seems very difficult for a lot of people because they've always been taught, well, aren't you supposed to tell me what to do? But we're totally against that concept. No, our job is to provide you with the information and to mentor you. Your job is to be in charge, not me. Okay? Remember, a good mentor teaches you how to trade, but does not trade for you. Unfortunately, our entire industry is based on the opposite, saying that a good mentor will only charge you a couple of $1,000s to do exactly what he does. It doesn't work that way. And that's why 85% of all traders fail. You should only trade according to how you feel comfortable and according to how you want to make the decision, not based off what someone else is doing. Okay, as we conclude here, remember, this is a great offer. Over 40 years of information and education on our platform, lots of more things that I didn't discuss, all for 30 days for only $7. Remember, you can't even get a cup of coffee sometimes that cheap. This is great, and I'll be there with you. Any question you may have, you can always email me as well once you become a student and a member of the platform. So take advantage of that. Contact Pro Trader Strategies. There's a link you see at the very bottom, or you can call them directly. And as we conclude here, I hope you learned something today, but more importantly, I hope you start to take charge of your own trading and be in charge. This is just the tip of the iceberg of what we teach. We have tons more information at Specialist Trading and Pro Trader Strategies. So as you take one last look at our disclaimer, I want to say thank you for attending today and taking time out of your weekend morning to join me, and I hope you become students of mine and members of the PTS Charting Platform. Thank you so much. I will see you next time. Bye-bye.